Today, we are digging into Newsmax's very first year as a public company. And let me tell you, it's a story that's absolutely packed with contradictions. We're talking impressive growth on one hand and some really staggering losses on the other. So how on earth is that even possible? Well, let's find out together. This right here is the central puzzle we're going to try and solve today. It's the big question at the very heart of Newsmax's latest financial report. How can a company seem like it's soaring and sinking, all at the same time? Let's break it down. And here they are, those two big numbers right next to each other. On one side of the scale, you've got a really healthy 10.7% jump in annual revenue. I mean, that's the kind of growth investors typically get excited about. But on the other side, a nearly $100 million net loss. This really shows you the core conflict we're here to understand. Okay, so to figure this all out, let's start with the good news. We'll kick things off by looking at all the ways Newsmax actually grew in its first year on the stock market. Because, honestly, the growth side of this story is undeniably strong. First up, let's talk about the top line. Total revenue for the fiscal year, it hit over $189 million. Now, this is the big number that just shows you how much money is coming in the door, and it proves they have a serious presence in the market. And if we zoom in a little bit, the story gets even better. Their core broadcast revenue, and that's basically money from advertising and the fees cable companies pay to carry their channel, that part grew by an even more impressive 17.3%. For their main product, that is a very healthy sign. But revenue's only half the story. This number right here is just as important. $0 in debt. And on top of that, the company ended the year with $131 million just sitting in cash and investments. So yeah, even with that huge loss we saw, they have a strong debt-free balance sheet. And that gives them a whole lot of flexibility to deal with any challenges. And the growth isn't just financial. It's about eyeballs. Their audience reach is expanding, and fast. They've locked in their spot as a top 4 cable news channel. In fact, according to Nielsen, they were the 6th most watched channel out of all of cable television. And as you can see, their expansion is global now, reaching over 100 countries and landing on huge streaming platforms like Hulu and YouTube TV. All right, so that's the impressive growth story. But what about the other side of the ledger? We need to figure out where that massive, nearly $100 million loss actually came from. And here it is again, that headline loss for the year, a negative $99.5 million. After seeing all that growth, this number just feels even more jarring. But the reason for it, well, it's probably not what you'd expect. And this chart explains almost everything. As you can see, the overwhelming driver of that loss was one single thing. A massive one-time legal settlement that cost the company over $78 million. Sure, other business costs are in there, but that single payment accounts for almost 80% of the entire loss. But it wasn't just the legal settlement. There are some real operational headwinds too. For instance, the company's digital revenue actually went down by nearly 11%. And connected to that, they've admitted their paid subscription service isn't growing as fast as they had hoped. Hey, you don't have to take my word for it. The CEO, Chris Ruddy, said it pretty plainly himself on the earnings call. This quote shows that management is fully aware of the weakness in their paid streaming service, Newsmax Plus, and they know it's a key area they absolutely need to fix. So, with this mixed bag of strong growth, a huge one-time loss, and some softness in their digital business, what's the plan? What's the strategy moving forward? Let's take a look. So their answer to all these challenges is what their CEO calls a multi-platform model. The idea is that they aren't just a cable channel anymore. Nope, they're attacking the market on 4 different fronts. Their traditional cable channel, a free streaming channel called Newsmax 2, their paid subscription service, Newsmax Plus, and a pretty broad digital media arm. The goal here is simple. Reach their audience everywhere, on every device. And that digital arm, well, it's a lot more diverse than you might think. It's not just websites and newsletters. Buried deep in their official company filings is the fact that Newsmax is also in the book publishing business. And this one is maybe the most surprising, they sell their own line of branded nutraceuticals, which are basically health supplements. Oh, and just a quick primer on a term you're probably hearing more and more. A fast channel, like their Newsmax 2, is, well, it's basically old school TV, but for the streaming age. It's totally free to watch, it has a set schedule, and it's all paid for by commercials. This is a key growth area, not just for them, but for the entire industry. Okay, so where does all of this leave them? Let's look at what the company is projecting for the future
And then we'll contrast that with the official risks that, by law, they have to disclose to their investors. Well, management is definitely optimistic. They're forecasting accelerated revenue growth for 2026, and they think they'll bring in somewhere between $212 and $216 million. If they hit that, it would be a jump of around 13%, even faster than last year's growth.
But then there's the mandatory reality check. Every public company has to file a long list of potential risks with the government, and you're seeing a little piece of that document right here. It's a long list, but it warns of some pretty significant threats, everything from the rise of cord cutting and changing viewer habits, all the way to the potential for serious damage to their brand's reputation. And that all brings us to the final multi-million-dollar question. Newsmax clearly has the cash in the bank, and they've got that audience growth. But they also face a really tough media landscape and some clear challenges in their digital business. Can their big bet on being everywhere, on cable, on streaming, on the web, be the formula that finally delivers both top-line growth and bottom-line profit? For now, that remains the biggest question of all.